Hello, my dear viewers. Good morning, good afternoon, good evening, depending upon whatever part of the world you are. Um, okay, so introduction is required now. Is my voice through? Hello, my dear viewers. All right, guys. I will lock the volume and lower it down a bit so that it is comfortable for you guys. All right. So this is Tikas Copy Webinars and you are watching Forex Trading with Rakesh. Today is 3rd of October 2022. I'm your host and I'm a Dukas Copy Traders community member. Please do not confuse me as an employee of Dukas Copy Bank because I am not. Therefore, all the views or opinions or the trading ideas or whatever suggestion I give or advice I do, that is only from my side. It has nothing to do with the Dukas Copy Bank. And in this live stream, we generally discuss the price action trading and the technical aspects of trading. And we do not talk about the fundamentals mostly. But this particular stream today that I'm going to do what is planned for the risk management actually. And actually, I was expecting a lot to gain from my viewers. It is supposed to be an interactive session where they will let me know how they manage their trades, and then maybe I will share with them how I manage my trades, and maybe how we should all together manage a particular trade, okay? And how we should try to open the positions. Thank you, RM Aju. Hello, welcome to the stream, Aju. Welcome. Would you be kind enough to wait so that everybody who wants to join or who actually joins us can join? Osman is here. Hello, Osman. Welcome to the stream, bro. So, Anwar, this is going to be a stream in which we will be discussing about the risk management. And believe me when I say this, this is the most important aspect of trading that you should learn before even entering into the markets. Have you ever heard about it that focus on the process and the profits will flow or the profits will follow? Have you heard this? So this is going to be very interesting and maybe a real eye opener for those who are new, those who have not even given it a thought, because you know this chapter of risk management is most of the times is considered at the end of any program that is concerned with trading. Hello MGA, welcome to the stream. I'm looking forward to this management. Yeah. So it is actually very simple, Anwar. The thing is that most of the truths in life are very simple. The most of the truths in life are very simple. No pain, no gain. Patience is the key, blah, blah, blah. And so many things. Honest is the best policy. And so many things that are simple are true. So we will only focus on the simple things and you will see how it is difficult, and not only difficult, but it is almost impossible to lose in the forex if you just follow these steps that I will tell you. I don't know how much it is worth of, but I believe it is maybe $1 million, maybe a billion, maybe $1 trillion advice or ideas that I'm going to just share with you, and they are freely available on the internet. Just you have to understand those ideas and implement them in your trading. And I'm going to do this with the help of examples. So I hope all of you have joined. I just don't see Clara here. I just wish that he or it is she, I'm not sure whether it is a girl or boy. If she would have been here, it would just complete the Dukas Copy Webinars Trading with Rakesh family, that small family that we have, and we could start. Actually, Damien is not here, but it's okay. We will start, and since these sessions are recorded, maybe they can watch it later, okay? But you have to be all with me because this is very important to understand the process. So before further ado, I just quickly flash the risk disclaimer, because we are doing a webinar on the forex, and the trading on foreign exchange on margin carries a high level of risk and is not suitable for all investors. Today I will explain this in detail in the session, that how it is so risky for you. Okay, and the past performance is not indicative of future results. You already know about it. So let's hop on to the charts. Especially today I will not be showing any charts to you, but only for the sake of examples I will show you a few charts. All right, so this is what we are going to talk about today. So first thing first, what is risk management? That is a simple question that I have written it down just to guide me through the process that I am going to talk. Believe me, I have no script for this, and I can talk about this topic entire day. All day I can talk about it. But the question is now, what is risk management? And if I ask you guys, why do we need to manage the risk? Why? I sometimes call myself not a trader. I sometimes call myself as a risk manager. I'm not a trader, I'm a risk manager. And there is a process. There's a process. The trading is a process. All right. If you just do this process of trading and you continue to manage your risk, you believe me, the rewards will follow. They will just keep falling into your pocket. The money I'm talking about here, which is rewards, if you just follow the process. Okay, and after say maybe 50 minutes, I will drill down this into your head, how you can be profitable consistently without risking too much in the market. Okay, and I'm going to go step by step. Maybe I should actually open an Excel sheet also, but I have not done that. Maybe we will do that calculation here right in front of you all. Okay, now what is risk management? That is the first question. Hey, Clara is here. Hello. I was just talking about you, that if you have not joined, then maybe we can wait, or you can watch it later. But since you are here, so we will start. So this is the beginning. Okay, you are not late. So this is the beginning. So the first question that we are going to answer is, what is risk management? Now, will you please let me know, what do you understand from the risk management? And if you do not copy it from Google, I mean, do not search it, what is risk management, and then come with an answer. No. What do you think? What is the first thing that comes to your mind when you talk about risk management? I mean, what are your concerns? What are your confusions? And what are your take on the risk management? What do you think it is? If you please let me know in the chat. Everybody can actually type, because different people can have different views, and then we will try to compress it down to actually what it is when we talk about the forex trading, or maybe any type of trading. Oh wow. So what is risk management? Clara, today's session is going to be, we are only going to talk about managing the risk, and maybe later on we will try and talk about the managing trades also. Sometimes I confuse it with trade management. Yes, the trade management is also a sort of managing your risk, but okay, the risk management, MGA has said something. I want to continue, but I want a few more inputs from my good viewers. If you can give me some more inputs. Do you, if you have no idea, you can write no idea what is risk management, and if you have some idea, let me know what is that idea. Because believe me, after 50 minutes you will be well versed with managing the risk. But in fact, is a way to administrate your capital. Yes, losing connection occasionally. Oh, Usman, I'm sorry about that. But I think our connection is good. I can see that because I have opened one of the streams by my side. I have not learned how to calculate 1% of my calculator. Really? All right, I will give you a few examples today, Clara. And first, I need to know, are you a girl or a boy? Because sometimes I call you her, sometimes I call you his. And the name, as I appreciate it, is a girl's name. I don't know what is Okadigbo, but Clara, I know it is name of the girls in the West. And forgive me if you're a boy. Anyways, so to be in the game without losing the capital. I think that is more appropriate, Aju. What you have said, what is risk management? To be in the game without losing the capital. But the problem here is that as soon as you place a trade, there is always a risk involved. Yes or no? So she is a lady. Welcome, lady. All right. So whenever you place a trade in the market, there is always a risk associated. How many trades can enter per trade? Come on, man. How many trades can enter per trade? Securing the capital is, yes, that is the risk management. Yes, that is what I will say. The more appropriate version of Aju is securing the capital. So you see, I will give you, say, we have now an opening balance of $10,000. I think we can have it. If you don't mind, will you please all write down in the chat how much is the trading balance that you have now? If you don't mind sharing. If you mind sharing, you don't have to write it. Okay, you can simply write I don't want to share. It doesn't matter. Okay, but if you want to share, if you can share, actually you can just write in US dollar how much you have in your trading account. What is your trading capital? Now lady was saying, Clara was saying that I don't know how to calculate 1% of my trading capital. What this is what she was saying. I have not learned how to calculate 1% of my capital. Now 1% is 1%. Now cent is 100. Okay, when it is 100 we count 1, when it is 1000 we count 10, when it is 10,000 we count 100, and when it is 100,000 we count 1000. All right, so a $10,000, if it is $10,000, all right, if it is $10,000, then what is the 1% of this capital? 1% of this is 100. I have 2000. I have to ask Elon Musk. Clara, yes. FGA is saying 10,000, or it is 10 euro. It's okay. 0. I trade demo up until I am consistent. Osman, this is very impressive. Osman, if you just Skype me maybe later on, I have my Skype shared at the end of the session. Maybe we can talk something about trading the demo until you are consistent. I like this attitude actually. All right, so going ahead with this now. Now say Clara, we will take an example of your only. Now since you have 2000, all right, since you don't know how to calculate everything, we will give you everything in your hand. Since your opening balance is $2,000, so 1% of 2000 is how much? 10% is 200. Okay, 1% is 20. All right, so if you have an opening balance of $2,000, then you will have 1% of this as $20. Now I'm talking to Clara directly. Everyone else can relate to it, though I use mainly demos as Anwar. That's good. That's good. If you are not consistent, you should stick to demo till the time you are not consistent. That is a must. Stick with demo until you are consistent. Okay, so 20 is the 1% of this capital. Now I say that you have to use this 1% on a single trade and you have multiple trades going on. Okay, now for example, I say that okay, gas I cannot calculate, say GBP JPY, I want to short it at 164.29. say, okay, this is just a say, I want to short 164.29 with a stop loss above this candle's high. See, your stop loss should not be based on how much you can lose. Your stop loss should be based on some support and resistance. And you see this level here, 164.42 is our swing pivot, right? It is our swing pivot. It was on the way down. It was a pivot that the price had made. So this becomes our swing pivot. What is the level? You keep an eye here when I say here, okay, here at this place 165.80 where it is written. So oh no, not here, high. Keep an eye at the high. 164.425 is the high. Okay, and I want to short, say right now 162.86, say I want to short at 162.86. When I hover my mouse to 162.86, okay, from 93, when I hover a bit higher than 164.42, a bit higher, say I have a 164 or say 160 pips of stop loss. All right, just for the sake of convenience we call it 150. Okay, I have a stop loss of 150 right now. If I calculate it beforehand, that I have a potential loss in case I sell it here and the trade goes against me and my stop loss gets triggered, I will lose almost 150 points. Fair enough, you got it. Now what is the potential profit? Now suppose there are no resistances or supports here on the way, and if I am targeting 157.57, how much I'm going to get? Approximately I'm going to get 500 points. Now the first question is when I divide this 500, all right, potential profit is 500 pips, right? All right, 500, I will not write pips, I will say points. Okay, and potential loss is 150 points. All right, you are with me till now? Now when I say that potential profit is 500 points and potential loss is 150 points, that is when I go into trade, this is one of these things is bound to happen. One of these things is bound to happen. This is going to happen. Either my stop loss is going to get triggered or my take profit is going to get triggered. So one of these things is going to happen. Now divide your potential profit by potential loss. Okay, simply do it. Divide your potential profit by potential loss. So 500 divided by 150, how much it is? Come on, we will open the calculator. Simply 500 divided by 150, and it comes out to be 3.33. all right, so when you say potential profit is 500 points, this is also called your reward. All right, and potential loss is also called the risk. Not, it's not 33, it is 3.33. all right, you are with me here? So potential profit was 500 points and reward was this. So no, it is 3:1, my friend Aju, because divide your potential profit by potential loss, that is 500 divided by 150, and your answer is 3.33. So when I rant about it, that please enter a position only when you think that there is a potential of gaining 3 times minimum the risk that is involved. So if your risk is 150 points and you think that there is a potential profit of 400 points, do not enter the trade. Okay, do not enter the trade, because if this is 400 and if this is 400 here, then what is your reward to risk ratio? Who will tell me what is the potential reward to risk ratio if the profit is only 400 points? So it becomes 2.66. all right, but you will say, some of you will say that 2.66 is much better. I am very happy with the 2.66. you may be happy, okay, you may be happy, but you are not going to just end this trade here and go home. Yeah, right. Aju 3 is to 1. It was, no, it was 2.66. Now the point here is that if you keep your stop loss 150 points, which is good thing to have here. Okay, I will write it here in the GBP JPY. See, the problem here is that you want to keep your stop loss 150 or more, because if you bring down your stop loss, then there is a possibility the price goes to test this high here and your stop loss gets triggered and you are out of the trade in loss, and then price moves in your direction, which is sell, and takes your profit targets, which is 157.70. But since your stop loss is triggered, you are no more into the trade. So you want to give your trade enough room to breathe before it can move into your direction. Or if it directly move into your direction, that's fine. But if it goes against you, you need to know when you are going to get out. Now in this case, we know that this is a level where if it is breached, we don't want to stay in this trade. So that's why our stop loss needs to be here. Now this all things that I am talking about are happening before entering the trade. How did you get 2.66? Okay, did you see that I changed the potential profit from 500 to 400 points? I'm just giving you an example that initially it was 500 points. If there was a potential profit of 500 points, yes, you will enter a trade, but because over there you were getting 3.33 as the risk to reward ratio. But now since we changed it to potential 400 points, so the reward to risk ratio comes now 2.66, and this is not good for us. Why it is not good, I will let you know now. Okay, now so when this thing happens, what you gonna do? Will you enter the trade if the potential profit is 400 points? I'm saying no. Every time I'm saying no, we should not enter this trade. No, we should not enter this trade. Today I'm going to tell you why we should not enter this trade. All right, so have you heard about the casinos? You have already heard about the casinos, right? There are a lot of people who go there, who go to the casinos to get that jackpot, and they gamble, they throw in their money thinking that yes, jackpots will be won. You don't know casinos? Okay, how can I tell you about the casinos now? All right, maybe you can Google around. So yes, people win about in this jackpots. People win jackpots there in the casinos, but how many? Very less people win the jackpots, but a lot of people gamble there. All right, a lot of people gamble there, and the casinos, like it is said that house always wins. They are always I'm an innocent guy. Okay, yeah, many innocent guys go to gamble there in casinos in Las Vegas. Okay, so the my point is not that. My point is that if even if the people are winning the huge jackpots, sometimes $1 million, sometimes even more than that, then how can a casino manage to make the money? How is casino still so profitable in the long run? See, the idea behind here is that casinos have a 5% of edge over the innocent guys or over the gamblers. Most of the times there is a jackpot, okay, but the house has an edge, or the casino has an edge of 5%. They are very rich statisticians. It is there in the baby pips also. I have got this idea from there to explain you. Now you see, they put all their money on the line to win a jackpot, but they lose and they go home. But on the contrary, if you think about the player of a poker game, how many of you know how to play poker? Anyone have played Texas Hold'em? Anybody? Poker player? Any poker player? The game of two cards. Okay. If you don't know, then it's a problem. But if you know, then you can relate it very easily. That the poker players, the professional poker players, they do not bet their entire capital on a casino is a 1:1 ratio with an edge of 1%. No, no, no. Casino is a 1:1 ratio with an edge of 5%. It is like if they win Again, I'm an ignorant guy. Okay, so it's like you bet 100 and if you win, you get 95. Okay, it's like that. So you get 195 like that. All right, you come back here, poker player. So the thing is that if they have say $100,000 in their account, in their bank, they will not go into a tournament with the $100,000. They will just buy a maybe $1,000 buy, not 100,000. That $1,000 is now 1% of their entire capital. Now they know when they enter a poker game, they are gonna lose it in its entirety, or they may win a huge. Now the problem is that $1,000, you have to think it like, yeah, trading is a business, isn't it? Yes. Now that is how you have to think about it. Right now, if you enter into a trade, okay, whatever your stop loss is, it should be an amount, it should be based on an amount that you can afford to lose. Yeah, trading is a business, it's not a gambling, and you have to convert it into a trading business from the gambling. Otherwise, Aju, if you just come in today and buy this gas thinking that gas will go up, you are gambling. But if you keep all the information in your favor, then you have an edge. Now that edge may be 5%, 50%. I will turn all the edges into your favor today, and at the end of the session, I bet that you will know how not to lose money. And I bet you, I will give you a challenge at the end of this session that make yourself lose your money. I will give you a challenge, and if you just follow my technique, you will never be able to lose your money. I challenge you. You will not be able to lose the money if you just follow the techniques that I share you. Okay, now the thing is here, we don't have to adjust your stop loss based on the money that we can afford to lose. Okay, from Clara's point of view, we will go back to that amount here. She has an opening balance of 2000. All right. All right. Oh, sorry. Okay, so she has an opening balance of $2,000. All right, and she can afford to lose 1% of this happily. Now, Clara, are you happy? Are you happy if we take $20 from your $2,000? Will you give it happily, or is there any problem? I mean, of course there is a problem, but will you suffer any problem with your heart maybe, or your mental peace will go down if somebody just takes 1% of your trading balance? Will it hurt you very much, or will it hurt you less, or will it not hurt you at all? What do you say? A simple yes or no, or maybe some, yeah. So what is this yes? It will hurt, it will not hurt. It's okay if I take $20 from your pocket. Is it okay when you have 2000? So think from your perspective also, everybody else who is listening, think from your perspective. If you have say $20 in your account, if I take $1 out of it, is it okay with you? Or say you have $100 in your pocket, I take $1, will it hurt you very much? Or is it okay that I can take, okay, $20, not a problem? So the idea here is that when I take $20 from you, I am giving you an expectation that I am taking $20, but if you just hold on with me, I will give you $60 back. If it is possible to lose only that, I'm happy. Yeah, it's okay. It's possible to lose only $20. Now we have to fit yourself into this trade. You see how we are going to do this. Okay, now you have $2,000 and 1% you are happy to lose. So we switch to GBP JPY, and you have decided to sell this pair right now with the stop loss of 150 points. Okay, there is no change going on here with respect to reward and risk. Reward will still be 500 points and risk will be 150 points. There's no changes, but how we are going to fit this into your trading account, you will see that. Okay, now with the $2,000, you are putting only $20 at risk. All right, how are we going to do this? risking and losing $20 and not threatening the capital is all right. Yes, that is what I meant to say, that even if your stop loss gets triggered, you should not lose more than 1%, and 1% here for Clara is $20. So you take a trade, you have everything calculated. Now if you win, you are going to, okay, now the third thing that I did not mention here is that how much are you going to make if 157.70 is achieved after you are in trade. So you are going to make 20 into 3.3, which is more than 66, more than 66, right? So it is going to be $66. So you are risking your $20 to gain a $66 profit. All right. So this is how you are going to fit this into your trading. Now say if you have to, so what you can do is you can just adjust your position size, right? And there are ready-made calculators here. Just 1 minute. We are going to buy GBP JPY, right? No, sell GBP JPY. And right now we have, so I'm going to give you just a minute, MJ, please. Let me fetch that site for her and then I will take her to that site. Okay. All right. So here it is. You see that, you guys? Can you see that on your screens? Right now something is going on here. Okay, so on your screen, what have I done? I am just refreshing this. This is the babypips.com tools position size calculator. Okay. So you have an account balance of $2,000. You are risking 1% of your capital. You have a stop loss of 150 pips and you are trading GBP, JPY. So you just enter it here and you enter the current price of the USD JPY. This is 144.45, I think. Right now, what is it? USD JPY. There it is. 144.54. All right. 144.54. When you press calculate, it gives you position size 1927 units. That's all. And find that risking 1% per trade is a lot. It is safer 0.1%. No, 0. Okay, I will come to that also, why it is not advisable for 0.1%. Okay, you see if this link is through, because sometimes they don't allow me to post links. I have just posted a link. Can you all see that link in the chat? Maybe bot can ban me from posting a link. I just hope that, okay, I don't see any link, so it is just not possible. So I will change it with www.babypips.com so that it doesn't count it as a link, and then maybe you can copy and paste it. What do you say? Okay, and that is also removed. So I may be banned from the chat, so that's why I am not doing it. All right, but I hope that you got it right here. Babypips.com tools position size calculator. This is an easy to follow website and gradually increase your position. So here it is, 1927 units. If you can adjust your position size, like I always say, that if you can adjust your position size in such a way that if your stop loss, which is 150 pips, gets triggered, you lose no more than 1% of your account, which is $20, and if you gain, then it will be, of course, 3 times the minimum risk that you're going to take. Okay, you please fetch this babypips.com tools position size calculator. It is very easy to use tool, and it is a must till the time you don't get a hang of everything doing without any tool. Okay, this is one thing. Now I'm coming back to that place where we had our platform. All right. So it's automated calculation. Yes, it's all automated calculation. This is one thing. And then what is risk management? We have already answered that it is a way of protecting your capital. Actually, before you get into the trade, you have to calculate everything like this, like we have just calculated. Now suppose there is another trade, say now when I say, do you remember, I will give you one example of gas now. Do you remember why I say that after breakout, let the price come back to retest? I always say this. You heard this, right? You heard this many times. Which of the lot size is better? Which of the lot size is better? What do you mean? Okay, here I give you an example. 0.01. No, 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 no. Here you find that the number of units, how many units? It is 1900 units. Okay, this is simple, 1900 units. Sometimes we have lots in millions, and sometimes we have lots in zero point 0.1 of the millions. Now 0.1 million is the standard lot in the MT4 platforms, whereas in Dukascopy the standard lot is 1 million, that is 1 with the 6 zeros, and in the MT4 the one lot is 1 with the 5 zeros. So here you can buy 2 with the 3 zeros, that is 2000 units. All right, a plus minus 10 is okay. So you better convert it into the units and then do accordingly. All right, please, we have only 20 minutes left and a lot to talk about. So when I say that yes, this is a good buy, it is 3 types in the calculator. Now we are talking for 2000 US dollar, isn't it? Yes, we are talking about $2000. Is 3 types in the calculator. All right, I guess we have to continue this risk management tomorrow also, maybe, because this is really very important topic, and I think it is not that easy to understand. And maybe if I can ask Janice, are you there in the chat? Are you there? If Janice is there, I would like him to post a link to my Discord where we can talk. All of us can talk actually. RM is more interesting. Another session again, please, will be interesting. Yeah, maybe tomorrow again we will talk about it. But for today, at least, let us learn as much as we can. So what is risk management? We know we want to manage the money before we enter into the trade. That is most important point. We do not want to just press the trigger and then we think, oh, where is going to be my stop loss? No, we are going to manage and talk about the stop loss before we enter a trade. We are going to talk about the take profit, potential take profit, before we are going to enter the trade. And yes, the challenges will come. I will give you a challenge. How much trading capital do you need for forex trading? Now, what is your answer? How much do you think that you need for trading? Well, because this actually depends from person to person. There is a guy who is very happy if he makes $10 a day, okay, and there is a guy who makes $100 a day, he's not happy. And there's a guy who makes even maybe $1000 and he is not happy. So it depends from person to person with what percentage or with how much amount you are happy. This is one thing. And when you were saying, Aju, why not to trade with 0.01, 10,000, if it is US dollar, then it's fine. Okay, so what I was saying is that it depends from person to person that how much trading capital do you need, because the level of patience that trading forex is demanding is huge. Okay, now suppose you have a $10,000 account. That's fine. But sometimes people are opening it with the $1,000 also. Sometimes people are opening it with the $100 also. Some are opening it with the $25 also, because they are offering it with the $25. When I started, they were offering maximum with $250. Nowadays, they are offering with $25. Now, people are thinking that, okay, invent of internet and accessibility of the trading platforms to everybody is giving, okay, better opportunities to everyone. They're giving away a leverage of 1:2000, 1:2000 leverage. That is what I call it. I cannot use that language here, but believe me, I want to say that's a shit. You cannot use $25 with a $2,000 leverage. That's suicide actually. Anyways, so what I'm trying to talk, when I opened my risk management lesson, before that I showed you a risk disclaimer. Now that risk disclaimer in the first line is saying that forex trading on margin carries a huge risk. Why it is so, I will explain you in a minute. Now okay, now there I have a simple question for you again. Say that all right, it is all mathematics. Okay, it's all mathematics. Say you have $100,000 account. Now simple question, say you have $100,000 account, and no, you have $10,000, right? You said that you have a $10,000 account, and you have account size is 100,000, sorry, 10,000, and leverage is 1:200. Now I'm simply asking you this thing, that you want to buy USD JPY. All right, USD JPY current price is 144.50. Now the question is, how many units of USD JPY, how much is the maximum unit of USD JPY that you can buy with $10,000? This is a simple question when your maximum leverage is 1:200. My simple question, how many units can you buy on margin when your, I'm not asking you how much you should buy, I'm saying maximum how much you can buy from the $10,000 account. I never use leverage. MJ is saying I never use leverage. That's good. That's actually interesting. If you never use leverage, that is the key to sustain for a longer run. Now, friends, what is the answer? If anybody knows, if nobody knows, you can write I don't know. Clara, what do you think? With the 1:200 leverage, how much can you buy USD JPY? Aju, 1 is not the answer. I have not calculated it. All right. So I will give you a simple mathematics about this. It is equal to 10,000 multiplied by 200. Simple. And the answer is 2 million. All right. So 2 million units you can buy or sell, or I will say 20 standard lots. Fine. If I say 20 standard lots, okay. When I say 20 standard lots, that means 1 pip is equal to $100, isn't it? Because the standard lot, 1 pip movement is equal to $10, right? Okay, I am explaining it slowly. Hello, Omkar Savant. Welcome to the stream. Well, Omkar is my friend. All right. So here 1 pip is equal to $100 because you have bought 20 standard lots. So it will be $200, right? So closely watch what is happening. If the position goes in your favor by say 50 points, how much you are going to make? 50 into 200. What is it going to be? $10,000, right? Right or wrong? If it goes 50 points in your favor, you are going to get $10,000. But the point is that if it goes against you by 50 points, you are going to lose $10,000. Isn't it so? Aju, can we use the calculator? Yes, you can use the calculator. Although I'm doing all the calculations for you because the time is less. You cannot see on the screen. Okay. Why? All right. Maybe now you can see. Oh, I'm so sorry. This was all happening in the background. I'm so sorry, Aju. I'm so sorry, man. Okay, okay. I think now you can see. I'm sorry. I'm sorry. This is my bad because that was a pop-up and everything was on my other screen. I'm so sorry. But I have, I think, written it down now. You can see everybody. I'm so sorry. So your account size is $1,000 and leverage is 1:200. I'm explaining it again. All right. So your account size is $10,000. Your leverage is 1:200, and so you can buy 20 million. And USD JPY is currently at 144.50. So you can buy 10,000 into 200. That is 20 into 1 lakh. That is 2 million. That is 20 standard lots. And 1 pip movement in this case, if you have 20 standard lots, will fetch you $200. And if it goes in favor of you by 50 pips, you will fetch $10,000 in your account. Okay, so your account size will grow from 10,000 to 20,000. But the problem is that if you lose 50 pips, in this case, you will lose $10,000 and your account size is 10,000. So that means your account will blow out. Right or wrong? Yes or no? And is it so difficult for USD JPY to just move by 50 pips or so? I will show you now. USD JPY moved by 50 pips in last 4 hours. In last 4 hours, this candle, the high was 144.97 and the low was 144.15. Do I need to explain? It is 70 points. All right. So in 4 hours, your account can blow out if you are wrong. Now, I'm not saying that you will be wrong or you will be right. The point here is what I'm trying to make out is that if you follow the risk management, which we have just talked about here, if you just follow the risk management, okay, this technique here, whenever you lose, you are not going to lose more than 1%. All right. And whenever you are going to win, you are going to win more than 3%. And if you continue in this fashion, now we are going to continue in that fashion. All right. Say you lost trade number 1. Okay. And you lost $1. Okay. We say that you have an account of $100. All right. Just for sake of simplicity. Then you have second trade. Say it was a win. And you have $3. All right. We will just remove the dollar from this equation so that oh my god, I cannot do this. I'm sorry, because this is on the other place. So let me open an Excel sheet for you guys, please. 1 minute, please give me 1 minute. So all right, Google Sheets, right? So forget about this text and let's do this plus window capture XLS. Okay, do we have this? Untitled spreadsheet. All right. So yeah, here we have. Do you see something on your screen right now? I think you can see all the calculations here. All right. So yeah. I'm sorry guys, I forgot what I was talking about. I really forgot. Okay. All right. Yeah, I was talking about the trades, number of trades, right? Say we carry out some. Aju, just asking, and MGA to you also. How many trades can you win out of 10? What is your current this win ratio? And everybody can share theirs if they want to. Clara, you can also. Okay. Out of 100, how many trades do you think that you can win generally? Or out of 10, how many you can win? What is your win ratio? Please let me know in the chat. Okay. Let me know in the chat, guys. How much is your win ratio? Out of 10 trades, how many you can win? What is your strategy? How good is your strategy? You guys are still with me? Nobody's replying. All right. So I think you are not winning at all. Okay, just joking. So say you have a trading system which has 50% win ratio. All right. When I say 50% win ratio, that means out of 10. Oh, Clara has a good 6 out of 10. Right. All right. When I say you have a win ratio of 6 out of 10, then it means out of 100, you are going to win 60 trades, right? Right or wrong? But if I write here, I do not carry my statistic exact, but I have around 55% wins and the rest losses. All right. But if I extrapolate it and make it to say 100 or 101, okay, I will remove this one. Then if I start writing them like this thing, win, loss, okay, sorry, win, then loss, then win, then loss, like this. So you will have out of these almost, Clara, I'm talking to you, so almost 60 of these will be like win, right? So I will say whenever you win, if you just stick to my plan, if you win, you are going to make 3%, okay? And if you lose, you are going to lose 1%. So this is -1. All right, win plus 3, 3, and lose is -1. All right. So we keep counting, but I'm not going to do this for the 100. I'm just asking you another question, that do you really know which trade you are going to win? I don't have patience when moving up and down. All right, Clara, this is the beginners level, okay? Believe me, you will get through and it will be very easy for you. You will have a lot of patience in the end. Don't worry. This is mainly in demo. Fear is against me in the live account. Okay. So you are still fighting with the fear, and so is Clara. So the question here is that, okay, let me finish this one and then we will talk about the fear and the greed. Okay. So out of these 100, which one are going to be in your favor? At present you don't know, okay, but when you see in the past, you see, okay, out of 100, actually 60% times I was right and 40% of the time I was wrong. All right, Clara, you know this, and MJ, you think that the 55% of the times you were right and 45% of the time you were wrong. My question is that out of these 100 trades, do you know, or what if I ask you like this, that you are going to have say 40% loss, right? If it is loss, and is it, Clara, just asking you, is it possible that you have 40 losses in a row, just 40 losses in a row, and then you all have wins? Do you mean to say like this? Is it possible? Is it just possible? I'm just asking. Yeah, it is possible. All right. So another question is that, say you have only 10 trades, okay? You have only 10 trades. We don't talk about others much. Okay, out of these you mean that 4 will be your wins, okay, and rest will be your losses. Can this happen that your losses come first and then comes your wins? Is it possible? Yes, it is possible. So the question here is that if you still have 2000 in your account, all right, and you are following, say, our risk to reward strategy, win means 3, win means 3, win means 3, win means 3, and win means 3, loss means 1, 1, 1, and 1. So this is the first magic, that is, now when you add these here, how much it is going to be? This is the sum. You see in the bottom right, this is the 6 here. All right, this is the 6 here. So you lose 6 times, you lose 6% of your account. But the thing is that you have, no, this is the difficult one I am doing. You are losing 6 times. I'm not saying that you are winning 6 times. Here I am directly giving you odds against you. Okay, you are losing 6 times. I know that you have said that you are winning. Okay, I will first calculate that for you. Okay, you have 6 wins and 4 losses. All right, you want to make more money, no problems. All right, this is how it is. So if you lose, you are going to lose 4%, and if you win, you are going to gain 18%, and your net was 18 minus 4, which is 14, right? Am I right here? Master the mind and emotions while detached from trades can make it easy to trade consciously, but this is very difficult. Master the mind and emotions. You cannot detach yourself from the trades so easily. It is really very difficult, but there is there's a habit which can make you do it, okay, and that is very secret. Okay, so here Clara has pointed out that she was going to earn 18% on her wins and 4% losses on her losses if she just follows this risk to reward, and say that you don't follow this risk to reward ratio. Okay, Clara, simple. Now you win 1%, okay, and you lose 1%. Say you don't consider the risk to reward ratio. I'm just asking, okay. Then if this is your sum 6 and if this is your loss 4, I am just writing it down, then you are going home with 2%. See, your life has been changed only by saying I will not enter a trade if there is no potential of winning 3 times the risk that I am going to take. If you just say yourself to this thing that I am not going to trade if there is no potential reward of 3 times the risk that I am going to take, which is 1%, I am not going to enter that trade. If you do not enter, you are not in that trade, so you are on the sidelines. There is no problem. That trade never came in your life because you did not take it. Till the time you did not take it, it cannot be reflected on your trading chart, or it cannot be reflected on your portfolio. It cannot be reflected in your trading sheet, right? So it did not come here. So my point is that still you will have 6 to 4 win ratio. Say if you have inversed it, now you are not taking all the trades like that and you are taking only most potential trades. So don't you think that you will have more better win ratio? Don't you think you will have a win ratio which is even better? Maybe 7 out of 10, maybe 8 out of 10, maybe 9 out of 10. Just asking, okay. And you will not only get 1:3 or 3:1 risk to reward ratio, but even better than that. Sometimes you will have 4, sometimes you will have 5, just because you were patient enough to wait for the right time. Okay, this is one thing. Second thing is that if you trade like reward 3 and risk 1, okay, and say you have 3 3 3 3 3 3 1 1 1 1, if you just turn, say this win was not a win, this was a loss, and this win also was not a win, this was a loss, and say this was also not a win, this was a loss. So you had 7 losses, okay, and only 3 wins. 7 losses and only 3 wins. Still you were 7 loss because it was 1%, so you lost 7%. And since you had 3% win possibility, you win 9% and you still go home in the profits of 2%. Does that make any sense to you? Does that make any sense? Clear? What I'm trying to say here is that you stick to this thing. I will not open a position if there is a possibility of less than 3 times of what I have risked. I will not open that trade. I am not going to enter that trade. This is one thing. And how I am going to adjust my position size? I am going to adjust my position size in such a manner that if I am wrong, I will not lose more than 1% of my account. Okay. Now, how you can gain that? From here, you know what is your current account balance. Say your account balance reach 2500, just put 2500 here. This will always be 1%. This will be your stop loss. Now how you calculate your stop loss? Simple. From the point where you open your position to the point where you think, okay, the market is going to go against me. In that condition, I don't want to stay in the market. That is your stop loss. You should not adjust your stop loss. You should adjust your position size. Your stop loss should be based on the charts. Now here, all right. All right, guys, this is my platform. Okay. Now, okay, see gold. Okay, gold has broken all the resistances today. So you see that if I want to buy this gold here, I want to keep my stop loss below this 1659 levels. Okay, I want to keep the stop loss below 1659 if I want to buy here. But the problem is that the stop loss is very far. So it is 3740 points. I do not want to open a trade here because my potential profit, which is here, is only 5880. Now 5880 divided by 3400 or 3700 is much less than 3. I do not want to enter a trade. So what I do is I wait for the price to come here and act this level to act as a good say support, and when here I see some bullish pin bar or bullish engulfing, I will keep my stop loss below that candle somewhere here and open a position maybe somewhere here. In that time my stop loss will be almost 2500 points and my potential take profit which will be here almost 6000. So it will be well within 2000 no, it will still not be, but I hope you got the idea, right? 2 into 3, 6. So the idea is that you should get 1:3 risk to reward ratio. If I get it, I enter the trade, but I do not adjust my stop loss level. I adjust my position size or I adjust my entry in such a way that if my stop loss gets triggered, I should not lose more than 1%. Maybe we will see more examples like this in the future. But right now, you just understand this much, that I am not going to enter a trade if my reward to risk ratio is less than 3. All right, I'm not going to enter this trade. Now this is in conjunction with the risk management. And how much trading capital do you need for forex trading? I think we will try to answer this question tomorrow, and also with some suitable example. I did not plan much about today's webinar, but I think I will come more prepared tomorrow. This much of talk is sufficient for 1 hour. We don't have much time. But how much trading capital do you need for forex trading? Now I'm talking with respect to leverage. The problem is that you need a lot of trading capital. The people opening the trading accounts with $25, with $100 is not recommended at all. Why it is not recommended, my friends? Because if you open a trading account say with $100, and if you are risking 1% and you are making 3% on a trade, say today you have made $3. Of course, if you have $100 account and you are following proper risk management, then you will only gain $3 on a trade. Now somebody may ask question to himself, is $3 sufficient? You have spent entire day to earn $3. Is it okay with you? So sometimes your reward that you get may not be sufficient for you. So how will you end up? You will end up doing more trading. Not more trading, I will say you will end up doing over trading. You may start risking more than 1% just to gain more than $3. And maybe you start risking more than 2% or 3% or maybe 5%. So eventually you will lose. Maybe you start over leveraging. Okay. So all this stuff comes into existence and then you end up losing or blowing up your account. So you should have a good bunch of capital, trading capital, you should follow the risk to reward ratio. We got important insights in tonight's session. Thank you. Okay, Aju, thank you very much for staying here. And I think we need to talk about this topic more in depth, so that we have a full understanding of the topic. I was thinking that risk to reward ratio and risk management, all these things I will teach, but I think 1 hour is not sufficient for this one. So maybe we will talk again about this tomorrow. Today, one important thing is that gas, I wanted to tell you, has broken below 6.599. And just quickly, 1 minute, I will take that this head and shoulder was broken. It was tested as a resistance, and now it has gone below this 6.599 here once, on 25th of September, where it made a low of 6.5216 here. Okay, now today that low has been broken. Now after making that low, the price made a high here, so now you can bring your stop losses above this high. This is 7.235, so you can bring your stop losses above this one. Now if this stop loss is taken, we don't want to stay in the short. Okay, so this is how you manage your trade. This is the example that I wanted to give you in the end. Okay, like this trailing stop loss, classic example, current gas trade, but the time is not there. So yeah, let's talk to you about all this maybe tomorrow. All right, so guys, I hope that you have now a bit of idea what is trade management, what is actually risk management, what is risk to reward ratio, and how you should adjust your position size. And maybe we will talk about this definitely tomorrow to gain more insights on this. Thank you very much for joining me. Thank you, Clara. Thank you, Aju. Thank you, MJ. Thank you all. Can you look at GBP USD? Why not? We still have time. I think we will look at GBP USD. GBP USD is going right into the resistance. You may be thinking, oh, I want to buy it. No, but I will say don't buy it. Okay, Clara, we want to buy it only above this 1.1363. Okay, this is our downswing pivot here. Till the time the price is hovering below 1.1363, we do not want to buy it. When it goes above it, then maybe we will be looking for the buying opportunity. Okay, don't get me wrong, but this is not a buy yet. Of course, there is a support now at around 1.1211, but the support doesn't matter when we have a huge resistance at 1.1363. So keep a sharp eye on 1.1363, and if you see some bearish pin bar here, you can open small short trade here with the small stop loss higher and can target 1.0326 again. But I will say do not be very aggressive when selling here. Okay, keep an eye how the things end up here. You want to see a bearish engulfing or a bearish pin bar, something like this at this place. Okay, or we will maybe while by the time the price reaches here, we will see you tomorrow. Okay, no buying here. Okay, no buying. Thank you very much for being here, guys. Share this channel, this webinar with your friends, and that's all I can say. Let me know if you want to talk to me on the Skype. This is my Skype. Maybe we can talk on Saturdays and Sundays when there is no webinar. See you guys.